Ever wonder how a huge, established company like, say, a major steel producer stays relevant? How do they actually perform and plan for the
That's
future?
a massive question, isn't it?
Exactly. And today, we've got some fascinating documents that let us peek behind the curtain at Tata Steel Ltd. Think of this as, well, your shortcut to getting a real handle on their financial health and where they're headed.
Yeah, we're going to dig into their latest financial results. That's for the quarter and the full year that ended March 31st, 2025.
Okay.
And we'll also explore some key strategic announcements, pulling from their financial statements, audited and unaudited, and, what came out of their board meetings.
Right. So the mission here is really to get a clear, concise picture of Tata Steel's performance, their big strategic plays, and what they see coming down the line. So let's start with the financials. How did the year actually look for them?
Makes sense. So the financial performance for fiscal 24-25. First off, the board signed off on the financials, right? For the year ending March 25. Both the audited standalone and the unaudited consolidated results. And if you look at the consolidated figures, the total revenue, it landed at 2,018,542.51 crore.
Wow. Okay.
Ah.
That's a seriously big number, over 2 trillion rupees. Just gives you a sense of the scale.
Absolutely. It really does underline the sheer size of their operations.
And what did that mean for the bottom line? What about profit?
Well, the net profit that's attributable to the company owners for that same year was 3,420.51 crore.
Okay, still a significant profit.
It is. Though, you always want to look at context. How does it compare? What influenced it? Some of that might become clearer when we talk strategy.
Right.
And importantly, there was a noticeable change in their accounting for the standalone results, specifically.
Ah, yes, I saw that. Something about how they value investments in subsidiaries.
Exactly. They've shifted to measuring these investments at fair value through other comprehensive income. FVTOCI is the shorthand.
Right.
Before, it was basically cost minus any impairment. The idea here, they say, is to give a more, let's say, reliable and relevant view of how these investments are actually doing.
So more market-based.
Kind of, yeah. And they applied this change retrospectively, so they went back and restated previous figures. It did result in recognizing a fair value loss through that other comprehensive income line.
Interesting. Okay, so moving from accounting to shareholder returns. Dividends. Any news there?
Yes, the board's recommended a dividend. It's 3.60 per ordinary share for the 24-25 fiscal year.
Okay.
But of course, that depends on shareholders giving the nod at the annual general meeting. That's set for July 2nd, 2025.
And there's a record date.
June 6, 2025. So, you look at that dividend alongside the profit figure, the accounting changes, it gives you things to think about.
Definitely. Anything else on the governance side? Like auditors?
Yeah, just a note that Ms. Perrick and Associates were appointed as the secretarial auditors. That's for a 5-year term, again, pending shareholder approval at the AGM. Standard, but, important stuff.
Okay, solid overview of the financials then. Now let's pivot to the future. What are the big strategic moves Tata Steel is making?
Well, looking at India, their focus seems quite broad, actually. A big emphasis on innovation and, importantly, sustainability.
Sustainability, okay. How so?
They're running pilots exploring alternatives to coal in blast furnaces, specifically looking at hydrogen and biochar.
That sounds significant. Moving away from coal, even in pilots.
It definitely signals they're serious about exploring lower emissions steelmaking routes. It's not just talk.
And what else in India?
Well, they're also looking at resource efficiency, things like water treatment, using microturbines for energy recovery, plus investing in renewables and piloting carbon capture.
Carbon capture, too.
Yes, and scaling up some specific pilots there, EasyMelt and Hazarna. These are pretty advanced technologies aimed at grabbing CO2 from the process. It's all part of that longer-term environmental game plan.
Right.
And it's not just production. Better logistics using LNG trailers, refining processes like getting lower alumina in the iron ore. It all adds up to efficiency.
Sounds like a really comprehensive push in India, tackling both efficiency and the environment. What about overseas? The UK and the Netherlands have been in the news.
Yeah, the UK is undergoing a major shift. They're moving towards scrap-based electric arc furnace, EAF, steelmaking.
Right. EAF uses electricity to melt scrap, much less carbon-heavy than traditional blast furnaces.
Exactly. And this move has backing from the UK government, including a pretty substantial grant.
Yep.
And interestingly, they mentioned reassessing some earlier restructuring plans for the UK. They actually reversed some provisions they'd set aside.
Oh, reversed them. So
Yeah.
maybe things aren't as costly or disruptive as they first thought.
It does suggest maybe a revised outlook on the actual costs or complexities involved there. Yeah.
And the Netherlands, what's the story there?
In the Netherlands, it's more about navigating the policy environment. They're in talks with the Dutch government about support for decarbonizing their plant there, Tata Steel Ltd, or TSIJ.
Hmm.
At the same time, they've had some orders from the Environment Agency, environmental regulations.
Okay, so some pressure there.
Seems like it. But Tata Steel's response emphasizes they expect to have enough liquidity and they don't see a major risk of losing their operating licenses early. They're engaging with the authorities, trying to find a way forward.
So juggling environmental mandates and the economics of going green in Europe makes sense. How are
Yeah.
they connecting all this back to their customers? Product development.
Yeah, they're really pushing the customer-centric angle, multiple ways to connect, using the new facilities at Kallingagar to offer more advanced steel
Oh,
products.
expanding their offerings.
Right, and growing their retail presence too, including digital channels. Branding is clearly important. They mention having over 20 brands.
Wow.
And innovation seems key. Over 100 patents granted, significant R&D spend. They highlighted some firsts for India, like specific high-strength steel grades, one for hydrogen transport pipelines, another for the auto industry.
So moving beyond just basic steel into more specialized high-value stuff.
Exactly. It shows they're focused on technological advancement, not just volume.
Now, a company this size, its impact goes way beyond steel. What about social and environmental responsibility? What are they saying there?
They've framed their efforts around 15 of the UN Sustainable Development Goals, the SDGs,
Okay.
and they put some numbers on it, claiming they've impacted over 5.7 million lives and spent over 2,274 crore on these initiatives in the last 5 years.
It's a lot of investment.
Ah.
Get more specific. What kind of things are they actually doing?
Sure, examples they gave. In education, helping bring over 22,000 kids back into school.
Mhm.
In health, a 93% redressal rate for high-risk pregnant women and children cases. Engaging over 43,000 youth in grassroots sports.
Okay.
Helping preserve tribal languages, over 45,000 people enrolled in classes. Unlocking about 5,300 crore in public funds directly for communities through grassroots governance work. And building over 500 bits of community infrastructure.
Those are pretty tangible results across different areas.
Yeah, and there's more. Gender and youth empowerment, over 2,500 women in leadership training. On the environment side, beyond the factory gates, creating water storage capacity about 116 million cubic feet,
Wow.
helping over 33,000 households adopt climate-resilient farming practices, and their SABLE program connected over 14,000 people with disabilities to support.
That's quite a list.
It is. And they stressed these were highlights from just the last fiscal year, FY25, suggesting it's an ongoing thing embedded in how they operate.
Clearly a broad focus.
Yeah.
Now, structurally, the documents mentioned quite a few mergers, amalgamations. What was going on there?
Right. They've brought several subsidiaries fully into the fold. Companies like Tata Steel Long Products, Tata Metallics, Tinplate, and a few others.
Okay.
And the key thing from an accounting perspective is they use the pooling of interest method, retrospectively.
Pooling of interest. What does that mean in simple terms?
It basically means they treat the merged companies as if they were always one single entity. So past financial results get restated as if the merger happened way back.
Ah, okay. And why do that? Strategically?
Likely to streamline things. Simplify operations, maybe get better synergies between the different businesses, make reporting cleaner. And they specifically noted, too, ISWP and Angle Energy are now reported under the main Tata Steel India segment. Shows that integration.
Right. Makes sense. A move towards a more unified structure.
Yeah.
One last point, the wider economy. Their reports mentioned potential impacts from a global slowdown.
Yes, the standard disclaimer stuff, but relevant. They explicitly acknowledge that things like demand, supply, pricing, both in India and overseas, are factors that could definitely impact their performance.
So they're aware of the headwinds.
They are. It shows they're keeping an eye on the potential volatility out there in the global economy.
Okay, so let's try and wrap this up. Our deep dive shows Tata Steel turned a net profit of about 3,420 crore on revenues topping 218,000 crore last year. Strategically, they're really pushing on decarbonization and innovation in India, making that big shift in the UK, engaging in the Netherlands. Plus, focusing on customers, brands, and high-value products.
Right. And alongside that core business.
A huge ongoing commitment to social and environmental programs, backed by significant spending and clear examples. And they've tidied up their corporate structure through those mergers.
And acknowledging those global economic risks, too. It paints a picture of a company actively managing multiple fronts.
Exactly. So this gives you, hopefully, a pretty solid, condensed understanding based on their own reporting.
Yeah, a good snapshot drawn directly from the source materials.
So maybe a final thought to leave you with. Think about this. How does a company with such a long industrial history pivot and adapt to today's huge challenges, like climate change and economic uncertainty? What can Tata Steel's approach, the investments, the shifts, the social focus, tell us about how other big industrial players might navigate the future? Definitely worth digging into the full reports if you want even more detail.